PPC posted a 10% rise in full-year earnings following strong sales in its key South African and Zimbabwe markets. Ketso Gordon, Chief Executive of PPC, joins us now for more. Ketso, thank you so much for your time today.
It's a pleasure
We know
to be
that
here.
you met your former colleague in the passage, but we'll delve into your numbers first. It seems as though you're very bullish on exploring on the continent. That's a bit of a surprise given the fact that we do know that there are other manufacturers there who might want to compete in similar areas to you, like Dangote Cement.
Yes, there are many competitors, but what we discovered is that about 40 million tons of new capacity needs to be built to meet the needs in sub-Saharan Africa just over the next 5 years. So if you look at a big country like the DRC, 80 million people, it's got one significant cement plant producing 500,000 tons of cement. Its current demands are probably around 3 million and growing at about 7 or 8% per annum. So while you find many competitors, there's still a huge pent-up demand that is not being met. In South Africa, we consume about 220 kilograms per capita of cement. In the DRC today, it's 24. So it tells you that they've got a long way to go, quite a bit of infrastructure to build, and there's no local production. And so the opportunities are clearly there. And that's an example of a place where none of the big, Lafarge is not there, Dangote is not there. It's a scary place for some people, but we've spent enough time on the ground and we understand the environment and we've built solid relationships, and we've even invited the IFC to partner us as an equity partner.
Who's the IFC?
The International Finance Corporation, the private sector arm of the World Bank, are going to be an equity partner in our investment into the DRC. So that's like one of the more attractive opportunities in Africa. There are many like it.
We know that many South African companies, when they do venture onto the continent, they tend to burn their fingers. How are you hoping to avoid a situation like that?
I think we're learning all the lessons. Don't go in there and try and play the big brother. These are independent nations. They're very proud of their culture and heritage and way of doing things. You need to respect that. 2 is don't try and build a plant or do a deal while a political transition is underway. So having 4 years of Kabila as president while we build our plant provides you with a lot of stability. That's an important lesson.
But you know these things. I mean, you've got to be like one of the most perfect people to do an Africa strategy. 10 years in private equity, so you know how to do deals for the long term. Then you worked in the presidency, and you've been with PPC now for a year. Is it what you expected?
It's a lot better than I expected. I think the PPC is an incredible South African corporate that has done incredibly well over the years, but has not adequately leveraged either its balance sheet or its skills adequately. And that's what we're doing. That's what we're doing. We have a great team at PPC. It has the ability, it has the humility to go into these places and build successful businesses.
That's fascinating. Just Rwanda, you touched on that for a moment, and I love that. Don't you love that strategy, Gugu, where don't go into any government that might be in transition, just reduce the risk. But Rwanda is the jewel of the African continent. It is the country that is growing, well, it doesn't have the oil revenues to grow as fast as Angola, but it certainly is growing from a secure base. Are you seeing perhaps that others are also identifying the opportunities that you've obviously seen with the investments you're making?
Yeah, I mean, I think Rwanda is a good example of a modernizing economy, strong political leadership. You might disagree with some of what they do, but at least they're strong and they have a clear direction and very focused on what they're trying to achieve, and very easy to do business in, which makes it an attractive opportunity for us. I think many South African corporates are beginning to see the opportunities. And I think as one leads the way, or and MTN has done it in many countries, ShopRite has done it in many countries. So there are other people who are laying the groundwork, and we're very happy to be adding to the mix in the infrastructure space for other South African corporates to follow.
We can all buy that. But then you have a look on the other side of your coin, and you've got Zimbabwe, where you're also putting more money into. And some people will be shaking their heads.
Yeah, I think it's people who haven't spent enough time on the ground. I think you have to spend time with people and make a distinction between government and people, as we would do in South Africa. So the people of Zimbabwe don't want to go back to the dark old days of 2004 and 2005. They are very focused on building their asset base. They understood what happened to money in that period, which is why cement is being bought, 90% of it, at a retail level in Zimbabwe. People are building what they know is an asset that will keep its value.
Alec and I were speaking a moment ago before we came into studio, and you mentioned that you had called for a construction CODESA a
Yes.
few years ago. What happened with
Last time he was here?
Last time I was here, yes. You know, what we've done is we've started that debate. I mean, there hasn't been a overwhelming, sort of, yes, we'll do it response from anybody. But what has happened since then is that I think we are seeing a multiple, sort of settings where government and business are beginning to meet each other to try and close the gap on the key thing that has prevented this country from moving forward, which is building trust. If a government is sitting there saying the private sector is bad, it's on an investment strike, it doesn't want to do the right things, it's exploiting pricing or whatever, and the private sector is sitting on the other side, that government is incompetent, doesn't have clear direction, corrupt, etc. That gap is just too big. And unless we begin to close that gap, I don't think we have a possibility of any type of CODESA. So what I'm observing, which I think is very positive for PPC, but for South Africa, is that there's a much more mature discussion about how to work together, look at new ways of delivering infrastructure. Government was very concerned about the collusion in the construction sector. And my response in a meeting with them was to say, why don't you lead the collusion? And they were like, taken aback. And I said, it's very simple. You need to build a couple of 100 schools. Let's get the best design through a competitive process and a cooperative process. Let's then put it out to tender, agree the price in an open tender discussion, and then you say, here's the agreed price, who wants to build? And you've changed the tender process, but you've also quickened the likelihood that those schools get built. So I'm optimistic that something's going to happen.
It's a lot more complex than it has been painted in the media. Government aren't idiots. They've got their own QSs to double check what they were being charged. So all of this is it's just the simplistic approach. But I love what you're talking, and I don't think there's anybody who could disagree with it. However, there is an underlying momentum that we're already seeing coming through.
Yes.
And we're just talking a moment ago, as with your former colleague Etienne Leroux, who was saying the construction sector, particularly those who are positioned towards government, are very optimistic. Your numbers today show that cement sales in volume are up 7%.
And in our presentations earlier this morning, we shared your view, which is that we are optimistic about the medium term. We are seeing a continuing trend of retail sales. So people at the individual level continue to invest. So that's happening. The private sector, both in terms of property and corporate offices and shopping malls and other things, continuing. We've just won 2 big contracts. One is Stain City, 10,000 houses. The second, Mall of Africa, which is going to be even bigger than Sandton, coming up in the Waterfall Estate. So just those 2 tell you that the scale of private sector investment is significant. The renewable energy effort, which has been very well funded and very well organized, is now at that point where it's going to be implemented. So we are already supplying to wind farms that are being developed in different parts of the country. We are seeing the beginnings of the infrastructure rollout, and I think it will increase in momentum. So I feel quite optimistic about 2015, even more optimistic about 2016.
So it's kind of happening.
It's happening.
As you were saying, if you could get everybody into a room and say,
it could happen faster.
Let's pull in the same direction.
Yep.
Before we let you go, this decision of yours to measure the Gini coefficient between top and bottom paid employees at PPC. Maybe like the CODESA, this could be breaking new ground. What's your thinking?
What I did, it's I come from a background which is very much ANC. I've served in the ANC. I ran the '94 election campaign. I worked in government, went to the private sector, but I still believe that income inequality is one of our huge problems. So in interacting with the lower level staff in PPC, I just felt it was a little bit short of what a living wage should be in this environment. Went back to the 60 senior managers and said, don't take an increase. Let's invest that money in the bottom. At that point, my salary versus the lowest was 1:120, which is a lot better than many corporates in South Africa, by the way, but it was bad. So I did the right thing, cut my salary, increased the salaries at the bottom with a sort of investment of about 800 to 900 rands a month for 1,000 people. And we've closed the income gap in PPC to 1:48.
Is that your salary?
Yes. Now, so my salary is now 48 times the lowest salary. When I started, it was 120 times the lowest.
Where do you think the right number is?
I think in a South African environment, if we can get to 1:40, I think we're doing incredibly well. You know, the ratio in many of our companies is 1:, you know, close to 1,000 sometimes. And this is a challenge to all of us. I'm not saying, you know, we want to become socialists, but certainly we can't continue in a sustainable way to have the levels of inequality we have in South Africa.
Okay, so before we let you go, you can sort out matters regarding the pay, but what about skills, in particular developing the lower level guys?
I think we are putting a huge amount of effort, so I don't want to bore you with the details, but we are spending 6% of payroll. You know, the norm is sort of 1 to 2%. We spend 6% of payroll on training. We have our own sort of internal FET college, because we need to focus on improving the skills. And we've got many examples of people who've started, you know, at the bottom and have made it to the top.
Ketsa, you got the same surname. Are you and Pravin closely related?
Not very closely. He's my father's brother.